Well, we didn't turn our phone.
Hi.
Oh, look, it is recording. Okay, you see, we can do it. Hello,
Ashley.
everybody. And Callie. We're back again to haunt your computers and everything like that.
So today we're going to be talking a little bit about the basics of homeowners coverage. So if you have not reviewed your homeowners policy in like 20 years, you might want to just get it out, review it, see if anything has changed, see if your mortgage is paid off, have you added an extension, anything like that. You definitely just want to take a look at.
And you also want to take a look at your deductible because, truthfully speaking, a lot of our long-standing customers had $500 deductibles before we really started delving into the review of these policies and suggesting, hey, look, maybe you want to increase that deductible up to $1,000 or $2,500, and there was a significant decrease in the premium when we did that.
Okay, so the first part of the policy we're going to be talking about is the dwelling coverage. Now, the dwelling coverage, this coverage pays to repair or rebuild a home if it is damaged by fire, lightning, hail, vandalism, theft, among other things. And the dwelling coverage is not the market value of the house. So a lot of times people call up and they say, oh, I'm buying the house for this amount. That's not the same. Market values change all the time.
They also include the land value, and you don't insure the land, you just insure the structure that's on the land. Like, even if a flood came even worse than Sandy and your house is buried under 10 feet of water, you still own the land. You can't live there as it is, but you still own the land. So that's why we take it out of the equation. And then we utilize the company's replacement cost estimators in order to get that dwelling coverage number. This isn't an arbitrary number that we come up with. This isn't a number that we can negotiate with. These are the numbers that come to you directly from the carrier. So there really isn't any wiggle room until we start seeing things like your homeowner appraisal or the actual inspection report from the company.
And you always want to carry enough insurance to cover the rebuilding of your entire home. Okay? And then the next part of the policy we'll talk about is other structures. This coverage covers detached structures like a detached garage, shed, fences, a gazebo in the back. Any structure that is not physically attached to the house would fall into this category.
Now, one of the things about this coverage is it is a percentage of what your dwelling coverage is, generally speaking, and it's going to be about 10%. So if your house is insured for $300,000, your other structures coverage is going to be $30,000 in the event of a loss to that other structure.
Okay, and the next coverage we're going to talk about is personal property. So personal property protects your personal items in the home that may be damaged from a covered loss. So we like to describe it as anything you can pack up and move to another location is considered your personal property. Another way to explain it is if you flip your house upside down, anything that drops out and falls into personal property. So things like furniture, clothes, electronics,
TVs, Blu-ray players, even the discs, the Blu-ray discs and stuff like that, that's all your personal property.
And special limits do apply to certain items. So if you collect money, coins, furs, silverware, if you have expensive jewelry, they have a limited amount of coverage on your homeowner's policy.
So you're better off looking into getting those scheduled onto either the homeowner's policy itself or onto a separate personal article floater policy.
Okay. And then,
look, I covered that.
she knew the next part. The next one we're going to talk about is loss of use. So this coverage pays for your additional living expenses if you have to move out of your home temporarily due to a covered loss. So this generally comes into play when your home is being repaired or rebuilt.
And one of the things that I would stress here, and this is based off of extensive experience, especially with Sandy, is because flood is excluded off of almost every homeowner policy that I've ever seen, you would not be eligible for the loss of use in the event of a flood. Now, we do have several other carriers now within the private market for flood that do offer that ALE, or the loss of use. So if you're interested in maybe talking about that coverage, ring it in.
And the next coverage is personal liability. So liability coverage can help protect you against any lawsuits for property damage or bodily injury that you or members of your family caused to other people. So for example, the classic example is a guest slips on your sidewalk or a guest trips down your stairs. The liability limit covers the injured party's medical bills, legal fees to defend yourself, and any damages awarded to the injured party. So the minimum most policies offer is $100,000.
Well, that's also the minimum required by the state of New York.
But we definitely don't recommend carrying anything like $100,000. You definitely want to protect yourself and your assets as much as possible. So we generally recommend carrying around $500,000.
And truthfully, premium difference in our experience between that 100, 300, and 500,000 is really not all that much. So you're better off paying a couple extra dollars to have that much more coverage for yourself and your family.
It's generally like a difference of $20 to $30 and for so much more coverage. But if you're in a position where you think it would be beneficial to have additional liability, then you might want to look into getting a personal umbrella policy, which we'll talk about in the future.
I got nothing for that one either. that's another show.
Yeah. The next one is medical payments. So this coverage is designed to pay for medical expenses to others who are accidentally injured on your property. It has a specific limit, and that's the maximum the insurance company will pay for that.
Most policies that we write within our office are $5,000 on MedPay, if not $10,000. However, state of New York, the minimum amount that you are required to carry on a homeowner policy is $1,000.
And probably the most important part of your homeowner's policy is that deductible that Kelly mentioned in the beginning. So your all other peril deductible is the amount of a covered claim that is your responsibility. It's your out-of-pocket expense.
And most people, like we said, they're generally at the $1,000 to $2,500 mark. We have people that go $5,000, $10,000. This is about your level of comfort with what you believe that you'd be able to handle in the event of a loss.
And there may be also separate deductibles for specific losses on your policy. For example, your policy may contain a hurricane or catastrophic deductible, and we'll devote some
a future podcast or whatever this is in the future to actually explain in detail what a catastrophic or hurricane deductible is, what a wind deductible is, and compare all of that to your all other peril deductible, which is that $1,200 that we were just referring to.
So that's pretty much the basics of a homeowner's policy. It's important for you to understand what is covered and what is not covered under your policy. For example, generally earthquakes and floods are not covered, so you definitely want to speak to your agent just so you understand what coverage you do have, because your home is most likely one of your most valuable assets and you want to protect yourself.
And I think that basically sums everything up that we were trying to explain today. So give us a like and stay tuned, because we're actually going to be posting later on the Yanny versus Laurel debate, because we want our clients' take on what they're hearing. Me personally, I heard Yanny.
I did not do it yet, so I can't say. So we'll see.
I'm going to subject you to it later.
All right, we'll see you guys soon. Have a good
Bye.
weekend.